right, so welcome back to Wall Street Silver. Thank you for joining us again. We have a wonderful guest today, Bill Holter. Bill, thanks for joining us.
Thanks for having me.
Lee?
You know, you've spoken often about the everything bubble. Where do you see this everything bubble going? How much longer is it going to continue? And what do you think will happen with gold and silver once it eventually collapses?
Well, there's no telling on timing for the exact ending, but we're in the end. I mean, you can see it. You can see that the Federal Reserve is backed into a corner. Back in September of 2019, they had a problem with the repo market. Interest rates went from 1% to 10% overnight. That forced the Fed to start kicking in $100 billion every night just to keep the most basic of basic credit operating. And now they've put so much money into the system that they're having to offer reverse repos, which has already attracted $1 trillion. I mean, they've created all this money, and literally as of today, the Dow has doubled since its low, whatever it was, 15, 16 months ago. You've got interest rates basically zeroed out, and they are doing the reverse repos, by the way, because they are panicked about U.S. interest rates going below zero. If rates go below zero, it proves that the U.S. dollar is a complete fraud, because you cannot have the world's reserve currency with a negative rate. I mean, think about it. If you go to lend money, you have to pay, or if you're borrowing money, you get paid. That upsets the entire financial world. So the Fed basically has only one tool, and that is to continue to pump as much money into the system, even though there's already too much money in the system. And that's evidenced, obviously. Take a look at real estate, look at stocks, look at yields, bond prices, look at commodities. They have created the biggest bubble in the history of history. I mean, you could pretty much add all the bubbles together and wouldn't combine to equal where we are today.
Yeah, that is
based on any type of ratio you want to look at.
Sure. I mean, that gets pretty obvious when you start looking at the markets. I mean, you know a little bit about it, and you're like, oh my goodness, everything is just blown up like crazy. Could you explain to our audience a little bit about the reverse repo and how it works and what it does?
Yeah, basically, it's a tool for the Fed to withdraw liquidity from the system. What they do is they offer collateral, and banks, hedge funds, money markets, etc. They will hit that. They'll hit that bid. In other words, they'll send money. The idea with using the Fed as a counterparty is that the Fed supposedly has no risk. And where we were 2 or 3 weeks ago, overnight money, it looked like was going to go negative. So what the Fed did was they raised rates by 0.05%. Now that's not 0.5%, that's 0.05. 100 would be 1.
Right. Yeah.
So they're offering 0.05%, and that's already attracted within 2.5, 3 weeks. It's already attracted over $1 trillion of capital.
Bill, do you think Wells Fargo's recent move to reduce their line of credit exposure is somewhat related to that? Now that they have that reverse repo option, they have somewhere else to put their money that's safer in this scenario?
I don't think those two are connected at all. I think, if I had to guess, Wells Fargo's doing that because they see that we're in a bubble. They see they're going to be stuck with a bunch of bad loans, and they're trying to head that off before they're trying to lessen their exposure.
Gotcha.
Do you think that it's going to dry up some more liquidity, and what do you think it portends to the general overall market with Wells Fargo doing that?
I believe J.P. Morgan, they didn't do the same thing. What they did was they've tripled their annual fees on on credit lines. But yeah, anytime a bank walks away from a market, that is taking liquidity away. Because now these people who had a credit line and thought, you know, they had a, if you want to call it a rainy day fund, now they don't. So they're going to have to start searching elsewhere. And I would suspect other banks are going to do the same thing. But just understand that the Fed, what they did in 2019 is the opposite of what they're doing now. And it's really, the best description is like an out of control bobsled. It's careening back and forth, hitting the wall on each side.
Is the Fed trapped right now? They just have no other option and they're sort of being pushed by the market?
Yeah, they have no tools left at all. As I mentioned, the only thing that they can do is put more money into the system. Can they lower rates?
No.
I mean, if they lower rates from here, then you have negative interest rates, and negative interest rates with the world's reserve currency, that does not work. And obviously, systemically, if you have negative interest rates, that is like the snake eating its own tail. And at some point in time, there's no more snake.
Well, at some point in this process, do you think that, okay, the Fed funds rate is already at 0. And so they really only playing with between the 2-year and the 10-year. And the 10 years come down dramatically. It was up as, 1.7 at one point. Now it's down to what, the 1.3 area. Is that where they can play with this in terms of yield curve control? I mean, that's the only tool they have right now because they can't raise rates. All they can do is the only playbook they have left is, as you said, printing, creating money. Or what do you think?
Well, yeah, they're locked in on both sides. They cannot raise rates and they can't lower rates because they're at 0. So they have no options. The Fed is backed into a corner.
Except for verbal job owning, try to talk the market up or down with their statements?
Well, I mean, they can do that, but at some point in time, the market participants are going to figure out, instead of chasing momentum, which is what's happened, there's going to be a flight to safety.
Is that sort of what we're seeing in real estate, where people are just desperate to grab hard assets in terms of, buy real estate at any cost, and that just hasn't quite yet transferred over to gold and silver?
In a sense, yes, but I think it's mistaken because real estate can be taxed away from you. Mm-hmm. Gold and silver can't be taxed away from you. Now, real estate does not have counterparty risk, as neither does gold or silver, and that's the biggest problem in an over-levered world. There's counterparty risk in everything. But the problem with real estate, you could look at an ounce of gold or you could look at an ounce of silver, and you can say it's not really, really true, but you can say an ounce is an ounce is an ounce, whereas real estate, there's many different variables, including location. Mm-hmm. And I would suggest that a condominium in a city is nowhere near as worth a dwelling in a rural area at this point, simply because of the violence in the inner cities. And just understand, you're watching these real estate prices explode, but not in the cities. You're watching real estate prices explode from people bidding properties up, out and away from the violence that's occurred and is still occurring.
Yeah. My own neighborhood, I'm seeing the same thing. The house 2 doors down from me just sold for 50% more than I bought mine 2 years ago. It's just really, and I'm stunned. I'm just absolutely stunned at what I'm seeing in my own neighborhood here.
Well, it's idiotic.
Yeah.
It's idiotic. And I mean, part of that, you do have people with cash balances that are trying to get out of paper and into what they perceive as real, and real estate is real.
If we could just talk a little bit more about real estate regarding the cities, it's just been a retail apocalypse. There people post, like Lewis Rossman posts these great videos on YouTube about like these cities, just New York City, all these closed stores. And then you have all this flight outside of the cities for residential. So you have habitational and commercial. And then you also have a lot of work at home people. And yet some people are going back to the office. But I would imagine that companies are just going to downsize their office space in these big, tall high rises in Manhattan, Chicago, and other big cities. How do you think that's going to affect the general market? Because I don't think it's had its impact yet.
No, it has not had its impact yet. I think if you look at New York, the last number I saw, New York City is the office space is 18.7% vacant, and you're going to have foreclosures. And one other thing, when I mentioned foreclosures, there's been an eviction and foreclosure moratorium since COVID started, and that's supposed to end the end of July. Now, Can they extend it? Will they extend it? I don't know. I suspect they have to, otherwise the thing blows up on them, because you're going to have a massive amount of renters out on the streets. So there's, bigger homeless problem. And on the other hand, you're going to have a massive amount of landlords who have not been paying their notes because haven't had the income. They're going to be foreclosed on. So, while your neighbor down the street, his property just sold for 50% higher, what's going to happen once these foreclosures and evictions start to occur? You're going to have people, we're going to go into vulture mode. It's been a seller's market, and it's going to become a massive buyer's market because there's going to be a flood of inventory.
Well, I think we're going to see BlackRock there with unlimited credit lines, just scooping up everything.
Right. And the plan is basically to buy everything up and rent it back to the previous owners or dwellers or what have you. They're going to own everything and rent everything back.
You will own nothing and be happy, Bill.
Exactly. People ask, when's the reset going to happen? Well, it's happening before your eyes. That's what's happening.
Yep. I totally agree.
So how do you think gold and silver will play in this from an investing standpoint? Say we're holding gold, silver, the real estate collapses. Do you think we're going to have significant buying power when that happens with our holdings?
Yeah, you'll definitely have a gain in purchasing power. And the reason being, as I alluded to earlier, gold and silver have no liability. In other words, they're an ounce of gold or an ounce of silver is not a promise of anything. The only thing it is proof that labor, capital, and equipment have already been used to create that coin or bar or what have you. Now, the world is awash in debt. There's more debt everywhere, public, private, on the sovereign level. There's more debt, and everything is a promise. Everything is a liability. And once this thing implodes upon itself, the last two men standing, the only monies on the planet that have no liability, are gold and silver. And you're going to see a panic bid. I fully expect silver and gold to go no offer for fiat currency. In other words, if you're trying to buy it with dollars or euros or yen or what have you, you're not going to get it. If you have silver and you want gold, you can probably get it. Or if you have gold and you want silver, you could probably get that.
Do you think the central bank digital currencies are going to come in and not be accepted, or how do you think that's going to work? Because they're obviously coming.
Yeah, we believe there's going to be two resets. The first one will be man-made, and that will keep those in power now still in power. But the question is, how long does that last?
Right.
And it won't be any different than a fiat currency. All it will be is a perfectly accounted for currency. So do the new digital currencies, do they have backing by anything?
They probably will not.
Maybe China will. Yeah. Maybe Russia will. Those that truly have metal will. As far as the United States is concerned, do we really have the 8,300 tons of gold that we have claimed for all these years? I highly doubt it.
Bill, is there anything that our audience should know that we haven't talked about or asked, or anything that you see on the horizon that we should be alerted to?
In a macro sense, I mean, if you're keeping up to date, I mean, I don't think there's any huge surprises. I guess there was a little surprise to some yesterday, where Basel III, London has let, or is in the process of letting, their banks off the hook with Basel III.
Yeah.
That's not a surprise. I mean, I said all along, they're either going to not force it upon them, or you'll see central banks backdoor capital to these banks to allow them to continue with the derivatives. And speaking of derivatives, I mean, that's what the whole problem is. The whole world is propped up with credit, and the credit, if you want to call it, is insured by derivatives. And there's well over $2 quadrillion worth of derivatives, and there's not even that much money in the world. It can never perform. It can never, the insurance company can never pay. We'll put it that way.
Yeah.
So people are going to find out that, oh, well, my account's insured, or companies are going to find out that, you know, this fund or that fund or what have you is insured, and people are going to find out all at once that it was all a clown show. It's not going to be paid.
Do you think Basel III is just completely dead as far as an influence into the price of precious metals?
Well, we didn't. If Basel III had teeth, you would have seen some price action moving up prior to June 28th.
Okay.
And as we got to within a week or 2 weeks ahead of time, I publicly said that I didn't think you were going to see much of anything. And, you know, the second swatch, if you will, because that's for the European banks, June 28th, and the second swatch is the British, the London banks. And that was not to take effect until December, but here we are in July, and they're already saying, well, you know, we're going to exempt these banks.
Do you think Basel III, the theory and concept behind it, will eventually actually be forced on banks by the marketplace?
Oh, absolutely.
Yeah.
When there's a delivery default, and it's coming, I mean, there's no doubt. There's no way that more gold and more silver can be delivered year after year than is produced, because it has to come from somewhere. Once there's a delivery default, I wouldn't give it much more than, I don't know, 48 hours, maybe 72 hours before everything unwinds, because what that's going to do is it will be proof of the fractional reserve nature of our markets.
Yeah. You have any thoughts on what's going on in Cuba? Do you think this unrest is going to spread to other countries? Do you foresee other currencies collapsing ahead of anything happening with the US dollar? And do you have any thoughts on the whole dollar milkshake theory?
Well, there's actually more unrest right now in South Africa than there is in Cuba. South Africa it's gone to violence. Cuba, that's a hard one to know at this point. It's so early. I mean, it's very possible that we've stirred that up. They have shut their internet off. So people now are flying blind. And I think that's a very real possibility at some point in many, many places all over the world, including the US.
Do you have any thoughts as to what you should acquire to protect yourself from like the coming storm? Do you think like junk silver, silver coins, bars? Do you have any like theory behind how
if you're in the US, and this is a really broad subject, but as far as silver is concerned, if you're in the US, there's no better silver to own than junk silver. I did an article, and I can either send it to you and you can post it with this interview, or you can go to our website, JS Mindset, and type in why junk silver with a question mark. Junk silver, for instance, roughly 14 dimes equals 1 ounce. So in a system down scenario, that's going to give you 14 transactions versus just one with a Silver Eagle or a bar or a generic or what have you. Junk is not counterfeitable. And the reason I say it's not counterfeitable is because it's got to show where. These were circulated coins. They can't be shiny and pretty.
Yeah.
But if you, there's 4 or 5, 6 different reasons why junk, and of course, junk is or was issued by the U.S. Treasury. So in a confiscation, in gold, you would probably want the pre-1933 Liberties and St. Gaudens because those are your coin collection. And with silver, you want either Eagles or junk because they were issued by the U.S. Treasury. As far as being prepared for what's coming, I would spend a weekend, shut your power off, shut your internet off, and see how you do for the weekend. Even shut your water. Even
like
shut
your
your water off.
grandparents.
Well, the whole idea is if you have been preparing, then you'll be able to find out where the holes in your plan are.
Yeah, no, that makes sense.
And go to your local farmers market. And I mean, I wouldn't do it with a lot because you don't want to spend real money when you could spend fake money. But either talk to farmers or see if they'll accept junk silver for purchases. I guarantee you they will.
Okay, that makes sense.
But my point being, find out what you're missing. You know, if you've got generators, well, are you using gas? Are you using diesel? How much are you using? How are you getting your information? Do you have a shortwave radio? You know, stuff like that.
Jim, do you have any questions?
No, this has been fascinating to listen to, and I really want to thank Bill for giving us his time today to update us. And I'd love to talk to you again in the future, in the next 2 or 3 months as things develop this year, to follow up on. It's going to be an exciting year. I think a lot of exciting developments, and as things develop, get your take on things again.
I'll do it. Be my pleasure.
No, thank you so much, Bill, for joining us. We really appreciate it.